Hi, I'm the Anonymous Investor, and today I want to give you the short list of what I believe to be the current best value American stocks that are publicly available on the market. So let's get started. Number 1. Apple, ticker symbol AAPL, is a tech company most well known for creating the iPhone and other electronics like MacBooks, iPads, and AirPods. But the company also has quickly growing online services like Apple Pay and Apple Music, which are some of the most exciting areas of long-term growth within the company. Apple's services section of the business alone is conservatively expected to more than double over the next 4 years, bringing Apple's services revenue to over $100 billion per year. Apple also recently announced the news of the Apple Card, a credit card that is claiming to revolutionize the way credit cards work by allowing direct, secure, and easy-to-use implementation with your Apple products. If the Apple Card takes off, revenue from services would more than likely significantly exceed analyst expectations. But that's not the only reason why I'm bullish on Apple stock. The other reason is because of the upcoming release of 5G devices, which are expected to be rolled out sometime this year, and will make data transferring and web browsing much faster. Needless to say, when the new phone models come out with 5G capability, I'd expect sales to drastically increase due to popular demand and hype surrounding the new network. On the financial side of things, the stock experienced some strong sell-offs due to poor iPhone unit sales back in November, and although the stock has recovered somewhat from its lows around $145, the company is still a ways away from its all-time highs of $230 per share. And despite strong potential for this company, it still trades around a 16 PE, which, in my opinion, is a pretty good value considering it comes along with a 1.5% annual dividend and is in competition with just a small handful of companies for the title of the largest publicly traded company by market cap in the world. Not to mention that the company always seems to have plenty of cash on hand, which allows for the acquisition of other companies and experimentation with projects that could open up additional growth vectors for the company. My second stock on this month's list is Facebook, ticker symbol FB. Now, Facebook, as I'm sure you're well aware, is a social media-based company that owns and operates 4 of the top 6 social networks around the globe in Facebook, WhatsApp, Facebook Messenger, and Instagram. So, much like Apple, this is also one of the biggest companies in the world. However, I believe that Facebook has an even stronger growth potential, which might come across as a bit shocking considering how much talk of regulation there's been. But I think a lot of people are overlooking some of the company's strongest assets. Back in 2014, Facebook purchased the virtual reality company Oculus and has since developed it into the biggest player in the virtual reality industry, an industry that some believe will be as revolutionary as the cell phone industry, and has near limitless potential for growth, though more modest predictions simply believe that VR will be one of a few major plays in entertainment and tech. Regardless, I think that this investment by Facebook is a decision that will prove to be a major factor in the company's future as a titan among others in the tech industry. Another factor that leads me to this conclusion is the Facebook Marketplace, a service that was created in 2016 allowing individuals to sell and advertise products through all of Facebook's platforms. Originally, this was created as a competitor to online classified companies like Craigslist, but has been rapidly evolving and taking steps towards becoming a serious player in the e-commerce industry. And given the number of people already using their platforms on a regular basis, I'd be surprised if Facebook didn't manage to grow this section of the business into a serious competitor in the online shopping space. The stock itself is currently trading around a 23 PE, which is a bit high, but considering the stock is still down nearly 20% from its all-time highs back in July, a case could still be made for buying it now. Unfortunately, Facebook doesn't give you a dividend, and while the corporation could create one at some point in the future, it likely won't be doing so anytime soon, as the company boosted its share buyback plan for this year by $9 billion. So, moving on to the third pick for the month of April, we have FedEx, ticker symbol FDX. So, FedEx is a shipping and delivery company that operates internationally, and this is a stock that's been hammered for almost the whole year. From Amazon announcing their own shipping company to take care of shipping needs, to economic issues in the EU and the trade war going on between US and China, FedEx couldn't really catch much of a break in 2018, and the company was forced to adjust guidance accordingly. This sent shares crashing down nearly 40% from all-time highs of around $263. Since this price drop, the stock has yet to really see much recovery, and many have been looking at the company in a negative light, but I think it's just a matter of time before the company makes it back to its feet again, especially when you stop to consider how much the company has invested in growing its network in preparation for future demand. Also, the trade war with China appears to be approaching its end, which, combined with the company's low guidance for the remainder of 2019, I wouldn't be too surprised if they managed to pull off an earnings beat at some point during the next year. FedEx's shares are currently being traded around a 13.6 PE, and they offer a 1.46 annual dividend. And I think one of the biggest reasons behind why I like this stock so much is because it's been so consistent in the past and has always managed to bounce back strongly from any adversity it's run into. And there doesn't really seem to be any long-term danger, so it really just feels like a 30% off sale on what appears to be a great business, despite some recent circumstantial hardship. And with that said, it's time for the last stock on my list, which is my speculative stock pick, and it is Activision Blizzard, ticker symbol ATVI. Activision Blizzard is a video game company famous for games like Call of Duty, Candy Crush, World of Warcraft, and a host of others that have made it easily the largest publicly traded video game company on the market. So you're probably wondering what makes this market leader a speculative stock. Well, it's had a bit of a bad run over the past 6 or so months, having dropped roughly 40%, which appears to have stemmed mostly from backlash over the announcement of a new game in the company's Diablo franchise, in which previous installments were computer-based. The new game, however, is set to be mobile-only, which upset the hardcore fans of the franchise. This, in combination with waning interest in older established titles, led to consecutive earnings misses, which has in turn seen the stock fall on some hard times, though I believe a turnaround will be coming sometime in late 2019 to 2020, when the Diablo phone game gets released. See, I think that despite the poor reaction from the game's established audience, the mobile game will strongly outperform expectations, especially in the much larger Asian gaming market. Activision Blizzard's partnership with Chinese company NetEase makes me particularly enthusiastic about the game's future performance, since NetEase has already had astounding success in the Asian market in the past with other mobile games of the same genre. Also, after last year's flop of an announcement at Activision Blizzard's yearly convention, I'd expect something big to get announced this year to regain the favor of the upset fans, which should once again draw positive public attention back onto the company. On the other hand, there are some pretty big risks associated with getting involved with this company. One being the possibility that their new game simply might not catch on, or further issues regarding the US-China trade agreement might cause some problems. Not to mention, the company still has a few more quarterly reports to go where the stock may do poorly before the release of the new Diablo game. And any one of these issues on their own could probably see the stock falling even harder than it already has, at least somewhat. But if you're still interested in the stock despite its possible risks, the company is trading at around a 20 PE and has an annual dividend of around 0.8%, which is actually pretty good when you take into consideration the scope of the company's history, wherein despite the recent plunge in share price, investors are still experiencing 5-year returns of nearly 150%, and the company has a very strong balance sheet to boot. So that's my top 4 American stocks for April of 2019. But before I conclude this video, I think it's worth mentioning that the markets have been performing very well recently and are currently pretty close to all-time highs. And so even though I believe that these are all great stocks, I personally don't have any plans to invest money at current prices, though for the purpose of full disclosure, I do own shares in all of these companies. Also, I'd like to know what you think of my picks for this month, so please leave a comment with any of your opinions, questions, or suggestions, and I'll do my best to get back to you as soon as possible. I'm the Anonymous Investor, and this is the Professional Investing channel. And if you want more videos like this, make sure to click the subscribe button and stick around for more content coming soon.